We're going to get into stocks, and I'm going to be looking at SPY. We're going to get into bonds. I'm going to be looking at TLT. We're going to get into currencies. I want to look at UUP. That's the double dollar. And I want to look at commodities. I'm going to look at USO and GLD. And I'm going to look at these fine symbols behind me here. That's it. Bitcoin and Ethereum. And so I want to put all of that together and kind of structure what's been going on. And we'll get into the news, which is really the biggest news. There's just a lot of big news stories out there. I mean, if I were to start out just talking to you about news stories, I mean, we had the two Minnesota lawmakers, all right, that got shot, that were killed. Well, one lawmaker and her spouse, and then the other one was injured, and his spouse, and that was shocking. All right, there's other stuff out there that you could pop here or there with protests and riots, but the big story, and everybody knows it, is what's happening in the Middle East. Right, the escalated conflict, if you will, between Iran and Israel. I'm gonna get to that because there's an important lesson that we need to learn from this, because there are patterns that happen. This is a pattern, folks. This is a pattern that happens on a regular basis, and you need to know the knee-jerk reaction that happens, and then the longer-term view, how I trade that. But first, we're going to get to the 40,000-foot view. Why do I call it a 40,000-foot view? Because I want to take a look long-term. I don't want to look at. I'm not a day trader. I don't want to look at 5-minute charts. I don't look at tick charts. I don't look at any of that. That puts me on the screen for too long. And when things move on a tick chart, things move on a 5-minute chart, it induces emotion. Okay? Very few people that I know can day trade successfully and day trade consistently. That's not me. That's not my area. I've done a lot of research on day trading. I've found some interesting systems and strategies on day trading. But I typically, it's got to be at least a week if I'm going to trade it. I really feel comfortable in the 30-day trade, but I could go from a week to a couple of months. And that's what I consider my sandbox in terms of trading. And you know me, I mean, I'm looking at trends, and I'm looking at contrarian, and I'm looking at volatility, and I'm looking at statisticals, but I'm mainly looking at seasonal opportunities. So I want you to keep that in your mind as we talk about what's happened in Iran and Israel and what I was able to find amongst all of the financial rubble, if you will. So let's go ahead and get started with stocks and the SPY, and I'm already targeted up. And this is the S&P 500 SPY. Now, I've got us all the way back to October, and I've got the highs that happened. This was in February, SPY hit its highs. Now, I snapped a line between here and here, all right? And then that opened up this Fibonacci retracement. So this is the lows from October. This is the highs on SPY from February. And here's the pullbacks, 38%, 50, 61.8. We hit the 61.8 retracement back on April the 8th. And from there, we've really retraced almost all of it. We're getting up here, but you know what's interesting that I see as I bring this open? I see a lot of red candles especially the last couple of, see a lot of green on the screen as we attempt to break out of this bottom and move higher. And we broke through the 50, we broke through the 38, and now the 38 becomes an area of support. And the other area of support is the lows that happened in the month of May. But I've noticed we're getting those greens and we're pulling back, pulling back. And so that's a lot of controversy. The market wants to go higher. Everyone knows there's going to be a money print. Our interest rate's going to go lower. Some days yes, some days low. But some days yes, some days no. Not some days low. But yeah, I mean, we're getting geopolitical events that are kind of shocking the market a little bit. Now we're up today. This is as of Friday's close. But if you look at today, and I'm just turning around real quick, everything's up roughly 1% to 1.5%. You see that the Dow's up about 0.8, S&P's up a little over 1%, Nasdaq's up 1.5%, cryptocurrency behind me here up even more. And is this the market signaling that the worst is behind us? Possibly. But what I'm looking at when I look at the S&P is, where is the next level? Where's the next level that we're going to go to? We're close to the highs for the year. The zero line is the highs for the year. I believe we get through here and then scroll on down. And this is that number I'm looking for, 690 on SPY. We are at 597, folks. That is better than 10%, 11% below where we are right now. Okay? So I look at that, and what I also look at is, well, what is the S&P at year to date? Okay, I'm going to give you that number right now. So as I'm looking at the real-time number for the S&P, year to date, we're up 2.33%. But if this thing giddy up and gets going, and I'm going to slide it over here for a second, just kind of show you what kind of time frame I'm looking at. This could happen well into the summer, right? Well into the end of summer. And I've given you the keys, the seasonal keys, to see this. That seasonally, between now and Labor Day, I see a big chunk of this move happening. Okay? So there we go. That's SPY. Let's dive a little deeper. Let's take a look at bonds. Now, bonds have been the Achilles heel of the S&P as of recent, because if you remember back in May, bonds were making this low. There were bond auctions that were going off. They happen every week. And in the back half of May, they were actually a little bit light, and it was scaring people. It was scaring people that a lot of foreign countries that usually buy up our bond auctions pull back a little bit, scared the markets. Oh my gosh, who's gonna pick up the debt of the U.S.? Well, that's changed in the month of June as we've got a little bit of a relief rally, and you can see it here in TLT. This is the 20-year Treasury bond ETF, and so if I were to lay this all out, let's start with I don't see anything contrarian that tells me that the bond market's moving one way or another. Right? This is a daily chart. Let's take a look at the week. The week doesn't really change much of anything. Look at this. If anything, we've gotten a low down here in the 82 area. Well, we got a bit of a higher low. The next area that I see happening is more of an area of resistance than an area of support, even though we're closer to support levels. But the bond market is going to help us dictate where the stock market goes. Here's what I believe can happen. If bonds go lower, that's going to put a chill on upward movement for stocks. But if bonds either go higher or stay the same, even if they stay the same, I see higher prices in the overall stock market. Right, so that's TLT. Let's take a look at UUP. Now, cash. What's going on with cash? This one's really interesting, folks. This one's got me. When I look at this, I would not have thought at the end of last year that we were going to be down 10% on UUP. All right, off those highs, those year-end highs. I did not expect to see that happening. And so what you're seeing here is you're seeing highs of around just above 30.50 for this double dollar. They call it the double dollar because it is an index. It's a basket of foreign stocks against the US dollar, but it's called a double dollar because it moves twice the speed of the actual DXY, or the S&P 500, or excuse me, the US dollar cash. So if we're down since December, all right, end of November, December, let's call it 10%. It's actually a little bit less than, it's a little more than that. If we're down 10%, we're really down 5% when you look at this in true dollar amount. Now, we could look at FX numbers like FXC, okay? And that's the Canadian dollar. FXC is the Canadian dollar. You see Canadian dollar, and this is 2025 right here, has had a boost. It's had a boost in 2025. We could look at FXJ for Japan. We could look at FXE. FXE is the one that most traders look at. That's the FX European currency. And you can see the European currency since 2025 has gone from 95 to now 107. That's big. All right. How about Australia? FXA. The picture that I'm painting here for everyone is that for most foreign currencies, we are higher versus the US dollar than we were at the beginning of the year. Same thing with Australia. Australia's seen a 60 become nearly a 65. It's a big deal. So it means that foreign currency is worth more now compared to the US dollar than it was at the beginning of the year, right? So a lower dollar means that if foreign currency is worth more, again, that's another arrow in the idea that the bull market should reign over the summer. We got a lot of things happening here in the summer that lend to a bullish market. We've got foreign currencies that are rising, which means our U.S. dollar is getting cheaper. All right, that's one. This is the best time for the markets to move higher because there's no news right now coming from corporate America. Most earnings, not all, but most earnings are done. We're not going to hear about earnings until after the 4th of July. And we get the strong earnings in July. It's the weak stuff that starts coming in August. The stuff that notoriously pulls on the market. So I think June and July are going to be great months. But seasonally, the data is clear. So we know that. I've shown that to you in past examples. All right. Stocks, check. Bonds, check. Currency, check. Commodities. Let's start with USO. USO. That is the United States Oil ETF. And as you can see here, I mean, come on. Is this thing going to go anywhere? It hasn't been anywhere. The last time we were not in between the area of, let's call it 60 and 90, it's really 60 and 80, was back in 2022. We were down here in the 40s. This is when wow, it just gets even better. Remember in 2020 when oil futures were below zero? Someone had to pay you to take barrels of oil off their hands. That didn't last for very long because everything went inverse. But still, oil was extremely cheap. Refined gas didn't come down as much, but it was very cheap in 2020, 2021. 2022, we started moving higher. And then we've been stuck in this range. Now, I believed, and all my seasonality was telling me this, that we were going to break out. And looks like we did here in the last week or so. But we are at the tail end of a rally in USO that I don't know if it's going to eclipse these highs we see here. If this escalation goes on, if more bombs are dropped on refineries, because the fact that the Gulf handles about a third of all the oil in the world. All right, we used to handle a lot. We're coming back up online, but this would be a shock to the system. And yes, oil would jump above $85 a barrel. But for now, if you could see, oil's actually pulled back a bit. Gold's pulled back a bit today too. But as long as oil doesn't go out of control, what's good for oil is good for oil stocks. And what's good for oil stocks is good for a lot of the S&P 500. That's another check mark in the bull camp. Let's take a look at gold, GLD. And GLD, the smart gold, I grabbed the wrong one. Let's look again, GLD. There's the gold shares ETF. Wow, look at that. I mean, it's up year to date, a few percentage points. Let's call it 23. Since the lows of 2022, GLD has more than doubled in price, doubled in value. It's also, just coming off of new all-time highs again. Now, gold is down today, getting a little cooling off, right? But wow, I mean, who would have thought that gold was going to lift like it did? And it wasn't. This lift didn't start back in 2022 based on a flight to safety. The lift was based on the fact that gold was undervalued, and it has been for years. Now it's coming into a value that's becoming more acceptable with the M2 money supply. Do we go higher than this? I believe a lot of it has to do with tensions in the Middle East, as gold would now become more of a defensive play or a flight to safety play. But yeah, I mean, just coming off of all-time highs, next area, you look at this, it's really hard to get an idea on where the next highs are. 325, 350 are round number resistance levels. That's the first place they're likely to go. I would need a good pullback to get an idea of where that retail high is coming in. But I mean, even gold looks like it's up and away, just simply because it keeps hitting that ceiling, that keeps moving that ceiling, that all-time high ceiling. All right. Now, let me move over in my tools for a moment. And I want to go to crypto tools. You know what I'm going to do? I'm going to make myself a duplicate here because I'm going to use this again. Let's go look at crypto tools. And I want to look at charts on Bitcoin. And here's a chart on Bitcoin. And this is a 70-day chart on Bitcoin. Takes us to April, right? If I were to just jump back, let's call it 75 days, because April is a significant low. We were earlier in the year at the 109,000 mark, and we pulled back. And so when you look at the move that's happened here, you've got that move off of 75,000 for BTC. We ran back up, and around 100 let's call it 112,000. It was 111,999 was the high, right? But 111,006, I believe, 677 is the closing high. So we're there. We make a little pullback. We jump up again. We pull back again. We're hugging that 50-day. See that? We're hugging that 50-day simple moving average. We also got a nice candle that came out of today, right? We've been seeing some really good candles every week, but the fact that we're going lower high and we're getting about same high and higher lows. Higher lows in June, higher lows in April, higher lows in May, higher lows in June. And as long as we can keep this momentum up, I believe 125 to 132 are the areas that I'm seeing for Bitcoin. All right, last one I want to look at with you today is ETH. That is Ethereum. And Ethereum has, that's kind of the tail wagging the dog. So if you look at Ethereum had a 4,000 print. I believe it was the end of last year, beginning of this year. Dropped all the way down to 1,400. And that was also done at the same time Bitcoin pulled back to 75,000. That was a monster pullback for Ethereum. And a lot of people discounted it and said, it's done. And it came back up and it hit this resistance level for the longest time. Then on May 9th, we had a huge candle that pushed us from 1,800 all the way up to 2,200. And to me, that's where the next support levels are, right down here around 2,400. And we've hit it a couple times, and we hit it last month, and we hit it at the beginning of June, and here we are up, back down, a little bit higher low, decent up candle here. 3,200 is my next spot for Ethereum, for those of you that are all cryptocurrency lovers, right? So in the overall, we've got stuff that's happening, and I'm going to talk about it in more detail here in just a few minutes. We got some geopolitical events happening. We have had tariff issues, on again, off again, on again, off again. We've had some things in the mix with stocks that weren't so pleasant. We've had eruptions in the bond market with auctions not going as well as planned, and yet this market still wants to move higher. Okay, It's like, try as you might, the stock market has not had any meaningful pullback. And I don't think it's going to happen anytime soon. And I believe what's going to happen if we do break to newer highs, you're going to see cryptocurrencies break to new highs too. They should outperform the stock market. And and I'm talking about overall markets. I'm talking about the SPY, the QQQ, the DIA. I see all of this, unless something catastrophic happens, I see all of this moving higher over the next 6 to 8 weeks.